Hey there! Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge, explanation, and news updating daily.
Sure. Let's chat about what's been happening in the Bitcoin world post-halving. So, you know how every 4 years or so, Bitcoin goes through this thing called halving? It's like a big event for miners because they suddenly start getting half the Bitcoin they used to for verifying transactions. It's a big deal because it means they're earning less crypto for the same amount of work. Now, everyone's wondering what the miners will do. Will they sell off the Bitcoin they have to keep the cash flowing, or will they hold on to it, hoping the value goes up? It's a bit of a gamble, really. And it's not just a local buzz. This has got the whole world talking. Places like the Middle East and Hong Kong are all reacting to this change. There's even talk about new Bitcoin sports ETFs popping up and the SEC getting involved. It's like everyone's trying to figure out their next move in this new Bitcoin era. So, in a nutshell, the Bitcoin halving has shaken things up for miners and got the global market on its toes. It's a bit like a financial soap opera, with all eyes on what the miners will do next and how the world will adapt to this new crypto reality. Now, imagine we're talking about the latest buzz in the stock market over a cup of coffee. So, the big news is that the New York Stock Exchange, the NYSE, is thinking about shaking things up by introducing 24/7 trading. It's like they're saying, why should crypto traders have all the fun, right? The thing is, there's this huge craving for non-stop trading. Investors are like night owls. They want to trade stocks like they do cryptos anytime they feel like it. And why not? We got the tech for it. It's 2024, and everyone's trading from their cozy couches with just a few taps on their phones. Now, the NYSE is catching up with the times. They're pondering over this vote, wondering if they should keep the lights on all night long. Because let's face it, the idea of trading stocks only during the day is so last century. We're living in an era where the market never sleeps, and the NYSE is thinking, maybe we shouldn't either. So, that's the scoop. The NYSE might just join the 24/7 party, and it's all thanks to the crypto market setting the trend and our handy smartphones making it possible. It's a whole new world for traders, and the NYSE doesn't want to miss out on the action. Let's take a stroll down memory lane and talk about how shopping has changed. Remember Express? That clothing store we all used to hit up for the latest trends? Well, they've hit a rough patch and filed for Chapter 11. It's like a wave goodbye to 100 of their stores. Kind of feels like the end of an era, doesn't it? It's not just Express. It's like the whole mall culture we grew up with is fading away. These days, everyone's cozied up at home, shopping online. Malls are turning into ghost towns, and it's eerie. Remember when we used to meet up at the mall, grab a bite, and shop till we dropped? Now, it's all about clicking Add to Cart on our screens. It's 2024, and the game has totally changed. We're living in the digital shopping age, and it's like physical stores are becoming relics of the past. It's a bittersweet trip down memory lane thinking about all those times at Express and the mall, but hey, that's progress for you. The world's moved on to shopping in pajamas, and honestly, who can blame it? So, here we are, 4 days after Bitcoin's big halving party, and guess what? The crypto king is playing it cool, hovering around 66.5K. It's like Bitcoin decided to chill after hitting a high note right after the halving, pulling up the rest of the crypto band with it. Now, the market cap today is sitting at a hefty $246 trillion. Sure, it took a tiny step back, but hey, that's just the market doing its dance. What's really got everyone talking is how Bitcoin is holding steady. It's like watching a seasoned surfer riding the waves. Makes you think it's all part of the plan. So, what's next? Will Bitcoin smash through its peak and soar to a new all-time high? That's the million-dollar question. We're all here with our popcorn, waiting to see if Bitcoin's going to give us a show-stopping performance. Stay tuned, folks. The future of Bitcoin is looking like a thriller. Let's chat about how the Financial Times, that highbrow finance paper, has gone from throwing shade at crypto to now rolling out the red carpet for it. So, they've got this crypto and digital assets conference lined up, right? It's like watching that one friend who used to make fun of your music. Taste suddenly jamming out to your playlist. They're kicking off this shindig from the 8th to the 9th of 2024. And it's not just a one-off. It's like everyone's finally got the memo that saying, I invest in blockchain is as clear as mud. You got to be specific, like saying you're into e-commerce isn't enough. Are we talking Amazon, eBay, or Alibaba level? And here's the kicker, the whole crypto versus blockchain debate. Remember when folks were all, blockchain not Bitcoin? Well, turns out, crypto's the real MVP. It's the secret sauce that makes the whole blockchain thing tick with its consensus systems. That's the big leap from the old days. So, what's the takeaway from this whole turnaround? It's that crypto's not just a part of the blockchain, it's the heart of it. And the Financial Times, they've done a full 180. From scoffing at crypto to spotlighting it. Just goes to show, even the skeptics can come around when they see the light. Or, in this case, the potential profits. All right, let's dive into a little chit-chat about what Standard Chartered Bank has been saying about Bitcoin. So, they've been pretty gung-ho about it, predicting that Bitcoin's price could hit a whopping $150,000 by the end of this year and maybe even climb to $200,000 by the end of 2025. They're sticking to their guns despite all the ups and downs in interest rates and the stuff going on in the Middle East. Now, here's the scoop. They think the gold bugs, the folks who traditionally invest in gold, are going to start putting some of their shiny coins into Bitcoin or Bitcoin ETFs. They're talking about a mix of 80% gold and 20% Bitcoin for the long haul. It's a big shift because back in the day, gold investors wouldn't touch Bitcoin with a 10-foot pole, either because they didn't want the hassle of storing it or they didn't trust the crypto exchanges. But now, with Bitcoin ETFs in the mix, it's like buying gold without having to lug around the bars. You can just get a piece of the action through the stock market. And let's not forget the last time everyone got super excited about Bitcoin's price. Back in 2021, people were throwing around numbers like $300,000 or even $500,000. But reality hit, and Bitcoin topped out at $69,000. So this time around, it seems like folks are being a bit more down-to-earth with their predictions, keeping it between $100,000 and $200,000. Standard Chartered is on the same page, which is pretty interesting considering how everyone's toned down the hype. So, there you have it. Standard Chartered Bank's betting big on Bitcoin. And they're not alone. It's like watching the old guard and the new kids on the block finding some common ground. Who knows? Maybe they're onto something, and we'll see Bitcoin hitting those high notes. Only time will tell. Let's talk about Bitcoin's latest party trick, the halving. Just a few days ago, Bitcoin went through this thing called halving, and it's like Bitcoin decided to go on a diet, cutting down the new supply in half. Now, this has made Bitcoin even more exclusive than gold. Imagine that. So, you know how we measure gold's rarity? We say it would take about 58 years to mine the amount of gold that's currently in circulation. That's gold's stock-to-flow ratio. Now, post-halving, Bitcoin has strutted past gold with an even higher stock-to-flow ratio. It's like Bitcoin is saying, look at me, I'm rarer than you now. What this means for us and the investors is that Bitcoin is becoming this shiny digital gem that's harder to find, just like gold. But even better because it's digital, right? So, if you thought gold was the only precious thing to hold on to, Bitcoin is here making a statement that it's the new digital gold to watch out for. And with this new level of scarcity, who knows how high its value could go? It's all about that exclusivity, and Bitcoin just upped its game. All right, let's dish the dirt on Dave Portnoy's Bitcoin roller coaster. So, Dave, the big kahuna at Barstool Sports wasn't born in the crypto crib, but a few years back, the Winklevoss twins got him to jump on the Bitcoin bandwagon. Thing is, Dave didn't really dive into the Bitcoin pool to learn the strokes, and his crypto swim was more like a doggy paddle, buying high, selling low, and getting tossed by the waves. Fast forward to 2022, and Dave's singing the Bitcoin blues. He got caught in the FTX storm, lost some cash, and swore off Bitcoin for life. But like any good story, there's a twist. After some time to cool off, Dave's had a change of heart. He's now saying he's got a better grip on Bitcoin and is eyeing the market, waiting for the right wave to catch so he can surf the crypto tide again. It's a classic tale of crypto caution turned crypto curiosity. Dave's journey from a Bitcoin basher to a Bitcoin buyer again just goes to show that even the skeptics can come around after a bit of learning and a little bit of time. So, let's keep our eyes peeled to see if Dave's going to dive back into the deep end of the Bitcoin pool. So Bitcoin just went through its latest halving, and guess what? The percentage of Bitcoin that's making money has bounced back up to a sweet 91.7%. It's like Bitcoin had a spa day and came out looking fresher than ever. Now the miners, those hard-working folks who keep the Bitcoin world spinning, they were a bit worried. Halving means their Bitcoin payday got sliced in half. But despite that, they still raked in a cool $107 million on halving day. Not too shabby, right? But here's where it gets spicy. There's this new thing called Mint Rune that popped up right when Bitcoin was having its moment. It lets people create new tokens on the Bitcoin network, which is pretty cool, but it also caused a bit of a traffic jam. The network got so busy that transaction fees shot through the roof, peaking at over $100 a pop. People were asking, why are the fees so high? Well, it's all because of this Mint Rune protocol. It's like everyone wanted to jump on the Bitcoin Express at the same time. But don't worry, the fees have chilled out since then, dropping below $20. Still high, but it's getting back to normal. So, if you're looking to move some Bitcoin around, just a heads up, it might cost you a bit more than usual. But hey, that's the price you pay for being part of the Bitcoin buzz. Okay, let's break it down like we're gossiping about the big players in the Bitcoin mining game. So, you've got these heavyweight mining companies in the US, right? Marathon and Riot are the names buzzing around. Despite Bitcoin going through its latest diet, aka the halving, these guys are hoarding Bitcoin like it's going out of style. Now, there's this thing called the Miners Position Index, MPI. Think of it as a mood ring for miners. When it's low, it means miners are holding onto their Bitcoins tighter than a kid with candy. And guess what? It's been pretty low since March. Before that, though, there was a bit of a sell-off at the start of the year, probably because they wanted to stack some cash before the halving hit. But here's the kicker. Since the end of March, the sell-off has cooled down. It's like the miners are betting on Bitcoin's price to double after the halving, so they can make bank just like the good old days. They're not selling, they're stacking. And if you look at the overall stash of Bitcoin held by all these mining funds, it's clear they've been playing the long game since the end of March. So, what does this mean for the rest of us watching from the sidelines? If these mining moguls are right, and the buying pressure from Bitcoin spot funds kicks back in like it's festival season, we might see prices shooting up. Because if there's less Bitcoin being sold in the back alleys of the OTC markets, buyers will have to hit the main stages, pushing prices up. Keep your eyes peeled. If the big guns are right, we're in for a show. Let's chat about the buzz around Hong Kong's financial scene, particularly about a fund named Victory Securities that's on the brink of getting the green light. This isn't just any fund. It's making waves with its unique fee structure for Bitcoin and Ethereum investments. Unlike the usual US funds that charge you a yearly management fee, think 0.15% to 0.25%, Victory Securities is shaking things up by charging fees based on transactions. Here's the scoop. If you buy directly from them, they'll charge you somewhere between 0.5% to 1%, with the minimum fee being a cool $850. Now, if you're tech-savvy and go for an online purchase, that's a flat 0.5% fee for you. But if you're kicking it old school and dial in your order, you get a bargain at 0.25%. The big question on everyone's mind is, what kind of impact will this have? Well, the word on the street is that when these funds launch, they could inject some fresh capital into the Bitcoin and Ethereum markets by the end of the month. But don't expect a financial tsunami. The initial wave might be more of a ripple since it's mostly Hong Kong and Chinese companies diving in, with the general Chinese populace sitting out until regulations loosen up. Hey there! Let's dive into the latest tech gossip. So, there's this company. Let's call it X for now. And guess what? They've just scored the golden ticket to move money across a whopping 25 states. That's half of the USA, my friend. It's like they've got the board set for a major play in the money-moving game. Now, everyone's on the edge of their seats waiting for the big reveal of their new money transfer service over the X network. It's like waiting for the season finale of your favorite show. And the plot twist? There's chatter about whether Elon Musk will sprinkle some of his crypto magic into the mix. Will he? Won't he? The suspense is killing us. But wait, there's more. The Dogecoin saga continues. Will this meme-turned-moneymaker coin make a cameo in X's new service? If it does, that's one small step for Doge, one giant leap for crypto-kind. So, keep your eyes peeled and your wallets ready. If Elon gives the nod to crypto, especially Dogecoin, we might just witness a new chapter in digital finance. It's all about the anticipation, the possibilities, and of course, the memes. Stay tuned. Hey, let's talk about the crypto craze in the Middle East, and boy, is it booming! BitGet just dropped some stats that'll knock your socks off. Trading in the Middle East? It skyrocketed by 166% last year, with the UAE leading the charge. Imagine this. Every day there are about 500,000 folks trading crypto just in the UAE. That's not just a few tech-savvy investors. We're talking a massive movement. Now here's a juicy bit. 72% of these traders are all about Bitcoin. But hold up, it's not super clear if that's 72% of the entire population or just the daily traders. My bet? It's probably the latter. Either way, it's a Bitcoin bonanza over there. And what's the takeaway from BitGet's report? No matter how you slice it, the Middle East is buzzing with crypto excitement. It's like a digital gold rush. And the enthusiasm for trading and storing crypto has just gone through the roof compared to last year. So, if you're into crypto, the Middle East is where it's at right now. All right, let's break it down like we're chatting over coffee. So, there's been a bit of drama in the crypto world, and it's got everyone talking. The SEC, the big financial watchdog, has been caught up in a bit of a mess with this company called Debtbox. It's like a legal telenovela. Two of the SEC's own legal eagles, Michael Wells and Joseph Watkins, have thrown in the towel. Why? Well, a federal judge called out the SEC for playing too rough, saying they've been abusing their power big time. It's not a good look, and it's got people whispering about a string of scandals that's been sticking to the SEC like gum on a shoe, especially when it comes to crypto cases. Now, the million-dollar question is about the big boss, possibly Gary Gensler, the head honcho at the SEC. Folks are wondering if he's going to be the next one to face the music. It's all eyes on the SEC right now to see what moves they'll make next. It's a cliffhanger, and we're all waiting for the next episode to drop. So, have you heard about the latest gossip that's been stirring up the crypto community? It's about this wild rumor that Senator Elizabeth Warren, who's not exactly a fan of crypto, supposedly proposed a wealth tax on anyone holding over $500,000 in crypto. Yeah, you heard that right. $500,000 in digital dough could have gotten you taxed 1%. But hold your horses, because it turns out this was all just a bunch of baloney. Dennis Porter from the Satoshi Action Fund was like a detective on the case, pointing out all the red flags. For starters, there were typos all over the place, and they even got the senator's name wrong. I mean, come on. It's Warren with a Z, not an S. And if you went looking for this so-called proposal on Warren's official website, you'd find zilch, nada, nothing. That's because it was never there to begin with. It's like someone decided to play a prank on the whole internet. Despite being a big fat fake, this rumor got people seriously riled up. It's easy to see why the idea of a wealth tax on crypto is a hot-button issue. But let's be real. If we're talking about taxing the rich, why single out crypto? What about stocks, gold, or that beach house in Malibu? The whole thing reeks of unfairness, doesn't it? It's like saying, hey, you worked hard, made some smart moves in the crypto world, and now we're going to penalize you for it. That's not cool. And let's not even get started on the can of worms it would open if we went down that road. So, yeah, that's the scoop on the crypto tax scare that never was. Phew.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.